All right, let's go to former Heinz CEO Bill Johnson, what he makes of all of this, because slap dab in the middle of it, if you think about it, Bill, there are these tariff wars that are building between the two biggest economic powers on the planet. Usually no one can come out ahead when that's happening, but what are you envisioning?
I'm not certain, Neil. I think we've talked about this in the past. I'm not a big fan of tariffs. Having said that, I truly understand the motivations behind this. My concern is that this becomes an emotional debate as opposed to a practical debate, and therefore the emotions carry the day and people don't make sensible decisions. But my own view is tariffs are inimical to capitalism, which is why I know what you're focused on this week. So to me, I don't like them, but I truly understand we've got to change the behavior of the Chinese. Otherwise, we simply can't continue to sell them electronic goods and other things where they can tap into what's going on over here.
How did you deal with them in the day when you were running Heinz? And I think you would freely say that they can play fast and loose. They're very good at what they do. But you obviously couldn't ignore a population that size or an economy growing that fast. So how did you play the China card?
Well, I knew them well because I ran that part of the world before I became CEO, and they were our fastest growing business. And I will tell you a very funny story about the Chinese. I was honored one year with an award, the Marco Polo Award, for being the businessman that did the most to build bridges between the two economies. And as we came out for the event, my wife was there, and they played Hail to the Chief. And my wife's in the front row sitting next to the Minister of Interior, bursting into hysterical laughter, which the Chinese, I didn't thought was very humorous. But the way you deal with them is you use Reagan. You trust but verify. You have to continue to recognize that they are in this for themselves, that they have an economy with a lot of people in it, many in the middle of their country that are incredibly poor, and their big concern is maintaining power as a communist system, and so they've got to keep their population somewhat satisfied with the growth and the economic performance of what's going on there. And the reality is we don't really know what their GDP is and what their growth is. It is whatever they tell us, but it's very hard for us to measure.
Yeah, I've always wondered, I know you and I chat about this over the many years, that they, release a figure and no one challenges it because they're the ones releasing it. But remember the days when they said their economy was growing at a double-digit rate? I mean, okay, whatever. But now we have to trust them to do whatever they're going to commit to do. By the way, that is if we get to that point and we have a deal that they're going to commit to. And that apparently is the real thorny issue for the Chinese, us policing them. And they don't like that.
Well, no. Again, you're interfering with a totalitarian state. I recognize they have some economic freedoms, although not as many as the popular media would lead you to believe. But at the end of the day, Neil, what's going to have to happen here is we're going to have to put a process in place by which we can measure and then react quickly to the kinds of activities that they've been doing to us over the years, as nefarious as they may be. We're going to have to deal with them. But ultimately, the two countries need each other. They need us right now more than we need them because they are a large consumer market. But fundamentally, we can do fine without them. Yes, it'll have a small impact on the GDP, and yes, some consumer prices may go up. But I think the panic and the hand-wringing over this has gone too far.
So you think this is an overreaction in the market today, and the fears that when these tariffs do kick in around June 1, the Chinese with our goods and us with the Chinese goods, that it will be short-lived?
Well, I think you've got a couple things going on in the market today. One, you've got these tariff issues, and then the second, you have the Supreme Court ruling on Apple, which certainly isn't helping things. And then you have the concern about the Saudi tanker that I was just listening to a few moments ago. So you got a lot of things weighing on the market. You've got people taking profits. And so you've got an opportunity here for people to sort of take a deep breath and relax. I don't know where the market goes from here. I never get terribly concerned about it because I've seen it low, I've seen it high, and it goes where it's going to go. And I think investment strategies have to be predicated on what you think's right for your own portfolio and what you think's right for the businesses you're investing in. So I don't lose a lot of sleep over it, Neil. If I did, I'd be even grayer than I am now.
Oh, come on. This wasn't your doing, but I did want to get your thoughts real quickly on the troubles that Heinz has been having when I had to restate earnings going back a couple of years after a review of the procurement process. I don't want to get in the weeds with that, but I guess the biggest vote of confidence came from Warren Buffett, so that it would not affect his investment, paraphrasing here, in Heinz. If he hadn't done that, it would have been very different, right?
Well, I think it would have. But remember, the stock's gone from a high of close to 90, I guess, down into the low 30s. And I think there's a real lesson here in their zeal to cut costs and so forth. They removed all the institutional knowledge, and therefore no one could tell them what they shouldn't do because it had been done before and hadn't worked. And I think they also forgot that growth is important to consumer products companies and all companies. You know, it's part of the capitalist system, and it's critical to innovate and to incent people to continue to move the enterprise forward. And I think they were so focused on cutting costs and trying to drive up current margins that they forgot about all that. More importantly, I don't think they have the right people in place to do that. I've lost a lot of confidence in what's going on there. Fortunately, I've been out of there now over 5 years. But what it says to me is I'm very proud of my leadership team at Heinz. We never went through any of these issues. And I think Mr. Buffett has no choice but to undergird it because he's got so much invested in it.
Do you still have Heinz stock?
No, I do not have Heinz stock.
Interesting. All right, Bill, thank you very, very much. Bill Johnson, the former Heinz CEO.